ETF Insights is brought to you by Nikko Asset Management. Your goals, our commitment.
Welcome, investors, to ETF Insights. I'm Michelle Martin. What are your options if you're looking for an instrument that'll give you exposure to steady returns and you want to avoid or at least offset the turmoil of stock markets? Well, a Singapore bond ETF allows you to own a diversified basket of bonds in one trade. And today I go under the wrapper of the Nikko AM Singapore Dollar Investment Grade Corporate Bond ETF, which trades on the SGX as MBH. U-Jin Lim joins me now. He is Senior ETF Business Development Manager at Nikko Asset Management Asia Limited. Good to see you, U-Jin.
Thank you, Michelle. Thank you for having me back on the show. Very nice to be here.
Great to speak with you again. Let's jump into the Nikko AM SGD Investment Grade Corporate Bond ETF. What does this comprise, U-Jin?
Yeah, so this ETF invests in a diversified portfolio of investment grade corporate bonds, right? As well as statutory board bonds denominated in Singapore dollars. So it tracks an index that, in a nutshell, this index is designed to reflect the performance of the entire Singapore dollar denominated investment grade corporate bond market, right? The full name, I'll just read it out here, is the iBoxx Singapore Dollar Non-Sovereign Large Cap Investment Grade Index.
Give us a flavor of the bonds in this ETF. Are there going to be names that any Singaporean would recognize?
Yeah, I think it would be a surprise if I read out some of the names and Singaporeans are not familiar with them. So some of the more prominent issuers in the index and the ETF will include established and credible institutions such as Temasek Holdings, HDB, DBS Bank, UOB Bank, NTUC, and the Changi Airport Group. Yeah, as I said, if none of these names sound familiar to you, then I'll be quite surprised.
Let's look at the name of the ETF a little closer. Investment grade is quite prominent. It stands out. What does this refer to in terms of the credit quality of the bonds that this ETF holds?
Yeah, so investment grade just means these are corporate bonds that are generally considered to be lower risk investments than bonds issued by non-investment grade issuers. Right? Think of it as a scale that starts from the highest credit rating of AAA down to B, C, and then lastly, where we do not want to be is in default D. Right? So only investment grade corporate bonds and with a credit rating of maximum AAA to BBB are eligible for inclusion into the index as well as the ETF, right? So these are lower risk investments and away from the non-investment grade issuers. This ETF really has a focus on high quality corporate issuers in Singapore. And it really is the intention is to provide investors with exposure to a diversified portfolio of bonds from companies with strong credit quality and financial stability.
You mentioned a key word for ETF investors, diversification. So how diversified is this ETF's portfolio?
Yeah, it's definitely very well diversified. Last I checked this morning, there were roughly 110 to 130 bonds within the portfolio. This is on average. Today it's 124 to be exact. And then the top 10 holdings, if you take the total weight of the top 10 holdings of this ETF, it usually does not exceed 25% of the total portfolio weightage. So that's one way we look at whether the ETF's portfolio is diversified. To elaborate further, maybe I can share really quickly the sector allocation breakdown. So banks, that takes up about 30% of the weightage, 30% to banks. Now, we mentioned statutory boards, HDB, LTA, etc. That's about 30% as well. High 20s, 30%, thereabouts. Now, then it drops down to about 6 to 7%, almost equally split between insurance companies, investment companies, and REITs. So roughly 6 to 7% each. Real estate as another sector, about 5%. And then everything else makes up the rest, the final 15%. So I guess, that being said, that means, the portfolio is fairly diversified.
U-Jin, how sensitive is this ETF to interest rate changes? All eyes on interest rates. How could this ETF fluctuate as interest rates move or change?
Yeah, I think that's a very pertinent question to a lot of investors today. All eyes on interest rates and how they might increase or decrease in the future, right? But I'm not here to talk about any crystal ball questions. At this point, maybe I'd like to talk a bit more about duration. as a measure of how sensitive bond prices are to changes in interest rates. Right. So when interest rates rise, bond prices tend to fall, and vice versa. Right. So if duration is high, that means a small decrease in interest rates will translate in a big increase in bond prices, and vice versa. The weighted average duration of the Nikko AM Sing Dollar investment grade corporate bond ETF is 6 years as of end January this year. Right. So keep that number in mind, 6 years. So once again, a simple way of looking at the inverse relationship between interest rates and bond prices and duration is to imagine a seesaw, right? As on one end of the seesaw, we have bond prices. On the other end, we have prevailing market interest rates. So as one rises, the other falls, and vice versa. So to extend the analogy further, so theoretically, let's keep all other factors unchanged. Supposing from today, interest rates now fall by 1%. A bond ETF, like our Nikko AM Singapore dollar investment grade corporate bond ETF, with a duration of 6 years, would consequently see prices increase by roughly 6%. But that's the happy side of the story, right? The inverse is also true. If interest rates now go up by 1%, bond prices would then consequently go down by roughly 6%. So I hope this illustration helps everyone.
Really useful for anyone thinking about how to pick a particular ETF of bonds, for example, to include in their portfolio. Coming back to the Nikko AM SGD investment grade corporate bond ETF, how often does it pay out distributions?
So, it pays out distributions on a semi-annual basis. I know if I've made this joke before, it's like Christmas coming twice every year. All right, if you invest in an ETF that pays out dividends twice a year, you would expect distribution payments on a semi-annual basis.
It's still a great line, U-Jin, I have to say. Brings so much joy to me as an investor.
Yeah.
Now, what is the latest distribution yield, though?
Right. So the latest distribution yield on the Nikko AM Sing Dollar investment grade corporate bond ETF, it's about 3.3%. And how we calculate this is based on two preceding payouts. So there was a payout of about 0.0158, so 1.58 cents in January, and then in July last year, a payout of 1.55 cents. Based on the last price of 95.51 cents, that results in a distribution yield of about 3.3%. Right. I do have to note that distributions are not guaranteed. Right. Past payout yields and payments do not necessarily represent future payout yields and payments. Right.
Diversify your investment portfolio with the Nikko AM SGD investment grade corporate bond ETF. Learn more at nikkoam.com.sg/igcb.
I'm going to dig a little. How has this ETF performed in the past, U-Jin?
It has done what is expected of a bond ETF. So I'm just looking at our fact sheet here. It's in front of me, and you can also download it on our website. It's available freely. If we look at the near-term performance, right? 3 months, 6 months, and 1 year. Let's start there. 3 months on a returns based on a NAV, so net asset value to net asset value basis. And we are also assuming that all the dividends, when Christmas comes twice a year, all the dividends and distributions, you reinvest it into the ETF. So if that's the basis of the calculations, 3 months performance would be about 3.54%. 6 months, if you held it for 6 months, it'd be 4.02%. And 1 year, and this is actually quite surprising, for a bond ETF, it has returned on a total return basis 7.08%. So these are quite credible numbers, especially in a year of turbulence, or in this period of turbulence that we have seen. 3-year performance is kind of flattish. The ETF has returned negative 0.4%, but that's really because in 3 years ago we were in the midst of the COVID crisis, and I think really at the start of where rates started going up, and that really impacted bond prices. But if we draw all the way back, since inception, which was in 2018, this is about 6 years ago, the ETF has returned about 1.85% in total return terms. Yep.
Great to have that in context. Last time we chatted, U-Jin, which was about a couple of months back, we talked about another Nikko AM product, an ETF, mainly of Singapore government bonds. How is this ETF different or similar to that?
So yeah, that ETF, that was the ABF Singapore Index Bond Fund, which allows you to get exposure to also Singapore dollar denominated bonds, but these are bonds issued by the Singapore government, and number two, Singapore government linked bonds. So the stat boards once again, HDB, LTA, Singpower. So the similarity is that both are Singapore dollar denominated, right? However, in the case of the ETF that we're talking about today, the investment grade corporate bond ETF, right? Investors gain exposure to investment grade corporate bonds, so the corporate bond market. What's the difference there? Investors should expect and would expect, or even I would say require, higher yields for corporate bond exposure because corporate bond exposure exposes them to a higher credit risk, i.e.,
Mhm.
the probability of default, right? Remember from AAA all the way down to default, right? With a higher exposure to credit risk, you as an investor should expect higher yields, higher returns. So this is why corporate bonds are higher yielding in general versus government bonds. It really is to compensate investors for taking on that extra credit risk. And that's a good thing if you're an investor looking for higher yielding instruments.
We may have talked about this last time, but I sense a similarity. It's also denominated in Singapore dollars. Is there a benefit to an ETF being denominated in SGD?
I think there is. I'll break it down into two categories, just roughly, right? If you're a foreign investor, you may want to gain exposure to the Singapore dollar, right? Because as a currency, as a whole, it has been managed very prudently by the MAS, right? It's well publicized. The MAS has got a Singapore dollar near policy, and that's really how they manage the currency. So exposure, right? Investment exposure to a strong currency could always be a plus to a foreign investor. But now speaking to the local Singaporean investor, like myself, perhaps, right? If I do not want to take any kind of currency risk, if I'm earning my income, my bonuses, my distributions in Sing dollar, then maybe taking on currency risk might not be so interesting to me. I want to look for a Sing dollar denominated investment where I know that currency risk is essentially zero for me as a local investor.
Fantastic. Let's talk fees. People
Mm,
love ETFs because they're considered a low cost
yes,
method of investing. What
yes.
fees would I be looking to pay with this ETF?
All right. So I think the investors should be looking at the total expense ratio of this ETF. So this means the operating expenses of the ETF as well as the management fees. So total expense ratios of the ETF is 0.26% per annum. Right. This is as per our audited financial statements as of June last year. And that is considered, that's very reasonable, and that's really, it's one of the cheapest ETFs out there, especially for in the bonds space.
In terms of safety, we talked a little bit about diversification in terms of holdings of this ETF. A
Mhm.
basic question an investor might have is how safe is investing in this ETF? And is my capital going to be guaranteed here?
Are always going to be risks. So we will be very hesitant to say that, and actually we do not say that capital is guaranteed, right? Because investments do come with risk. So bond ETFs are no different. Like all investments, they carry risks that investors should consider investing in. So we touched on duration as a measure of interest rate risk. So that's one risk that bond investors or bond ETF investors should be aware of. So bond prices are sensitive to changes in market interest rates. When interest rates rise, bond prices tend to fall, vice versa. That seesaw relationship. So as a result, bond ETFs that have a higher weighted average duration may be more sensitive to interest rate movements than those with a lower weighted average duration. A concept that we have not spoken about yet would be credit risk. So this is once again, that additional yield or additional yield that investor would be expecting to take on more credit risk when you invest in a corporate bond over a similar duration government bond, right? So if credit spreads start to widen, bond prices would also fall. So it's also is very important that investors should carefully consider these two risks as well as other risks and conduct their own research before investing in any bond ETF. Also, in light of your own investment goals, risk tolerance, and your investment time horizon.
You mentioned additional yield spread. What kind of additional yield can we expect?
Yeah. So let's talk about credit spread. So this is the additional yield that we mentioned, right? It's really the difference in the credit quality. So let's take a look historically. The difference in the yield between this ETF's index, right? So corporate bond, Singapore investment grade corporate bond ETFs index, right? And the yield of the Singapore government bonds of similar maturity. And if we look at this credit spread over the last 5 years, right, the index's yield, so the iBox Sing Dollar Non-Sovereign Large Cap Investment Grade Index, has consistently provided an additional, relatively stable credit spread of around 100 basis points. So for the uptick in risk that you're taking on, you're also enjoying an uptick in yield of about 100 basis points or about 1%. And this is over a historical period of about 5 years, right? But past performance is not necessarily indicative of future performance. That still could change, right, as we go on into the future. Yeah, so we have seen credit spreads widen up to maybe about 200 basis points, which means that and this was really during the start of the COVID crisis, right, where we've seen it go up to 200 basis points. But on average, over the last 5 years, it's really around a band of about 100 thereabouts.
Well, my final question, the very important one, U-Jin, I hope we'll spend some time here. How do I get started investing in this ETF?
Yeah, so there are multiple ways you can start investing in this ETF. The most obvious way would be, through your stockbroker, which you may already have, or if not, there are multiple. There are many good stockbrokers in Singapore, and you can use. And the best thing is that you can invest in this ETF using different pools of money, right? You can use cash, right? You can use your CPF monies, or you could even use, if you're familiar, your SRS monies, your supplementary retirement schemes monies, right? So that's one way through your stockbroker. Right, it's traded on the Singapore Stock Exchange, which means that there is intraday liquidity. You can buy and sell even within the same day. Another method that we really like to talk about when investing in ETFs is through a regular savings plan. Right, so this is really a simple execution of a dollar cost averaging strategy, which allows you to put in a fixed amount of dollars, fixed dollar amount into an investment, hopefully this ETF or any other good ETFs, on a regular basis, usually about a monthly basis. So from as low as $100 monthly, you can start your investing journey very easily through any choice of brokers offering a regular savings plan.
Well, we've been talking about the Nikko AM SGD Investment Grade Corporate Bond ETF. It trades on SGX as MBH. U-Jin Lim with me today, Senior ETF Business Development Manager from Nikko Asset Management Asia Limited. U-Jin, thank you so much for joining me.
Thank you so much for having me on the show as well. Thank you.
This has been ETF Insights. I'm Michelle Martin.
ETF Insights is brought to you by Nikko Asset Management. Your goals, our commitment. Learn more at nikkoam.com.sg/IGCB.